Hey guys, what's up? Hope you guys are having a great day today. I wanted to run a quick idea by you guys. I've got another full analysis video here for the CAD Swiss. My name is Matthew Spazzini. If this is your first time, seeing me on TradingView, I would like to say welcome. I'm so happy you guys are here. Absolutely love it when you guys come and you like my stuff and you comment on my stuff. It just makes me feel really good. Makes me know that you guys are getting a lot of value out of it, which is awesome. For those of you who don't know, I'm not a consistently profitable trader. If you read the descriptions in every single one of my posts, yes, a lot of them are very similar, largely because I operate off templates, right? I've created templates off some of the very first posts I've ever made about a year or so ago, and I just like to use those because I think that they're very, very useful, and they help me a lot with just pumping out content at a pretty fast rate. If I had to write all of those brand new ones every single time, then it would take me absolutely forever. So it's really, really cool to be able to just, use templates. If you're into content creation, if you're posting trading ideas, anything of the sort, I highly recommend it to you. I don't think it diminishes the quality of your content at all. I mean, most people only ever, write one or two lines identifying where they're getting in, when they're getting out, and stuff of that nature. At least on TradingView, that's the case. So for me, I like to use templates because I like to write a lot. I like to talk a lot, as you can clearly tell. All right, here we have a trade on the CAD Swiss. So that being said, before we get into it, that means that every single trade that I'm doing here, everything that you're seeing, all the ideas, these are not real trades that are being taken live, okay? These are all just me practicing. It's all hypothetical. Me practicing my trend continuation, 618 pullback strategy. It's a very simplistic strategy. I created it a little while ago that I'm still kind of in the process of testing. Currently, I have tested it over the Aussie CAD, the Aussie Yen, and the CAD Swiss. And I have to say, it's been pretty positive for the most part. So all three of those currency pairs, it's actually profitable on, and it's doing very well. So I'm going to be testing it over one of the Euro pairs. I think Euro Yen is the next one. And I want to test it at least over 5 or 6 different currency pairs before I start trading a lot with real money on it. So when I start, I'll let you guys know. That said, though, here is me practicing my chart analysis on the CAD Swiss. So as you can see here, we've been trending up. We're definitely bullish. We're moving from the bottom left corner of the screen to the top right corner of the screen. Now, many of you may not like that way of talking about it because that may seem overly simplistic, right? But this is a bullish trend. All right, and if I was really going to get into it, what I would tell you is that we had an initial low, an initial high, outside return or retracement. We had a extension, which made a new structure high, and then a retracement, and then we had another extension. This is the 3-point move that you have to have in order to identify a trend. All right, this is a 3-point move. In my book, this is what I have to have in order to identify a trend. This makes a bullish trend for me. We broke structure to the upside, had a retracement, extended higher, and broke structure to the upside again. That is what I identify as a bullish trend. And flip it around and do the opposite, that's a bearish trend. So that's me getting a bit more technical about it, but I also like to say, if you're kind of new into this, just look at the bottom left corner of the screen. Is it moving to the top right? Yes, it is. It's bullish. If it's doing the opposite, it's moving from the top left to the bottom right, it's bearish. So pretty simple way of looking at it. But as you can see, we started down here at the 70.61 price level, and we retraced and we broke structure to the upside. We didn't really get much of a retracement down here. So I initially did draw my fib retracement tool from this structure low to this structure high. We didn't get a 618 fib retracement here, but we did rally, and off of that rally, we did get a 618 retracement. So this is good. I don't know whether this is going to work out or not, as nobody does. No one has a crystal ball. And if they try to tell you they're absolutely guaranteed something's going to happen in the markets, anything guaranteed in the markets, yeah, just run away. The only thing you're guaranteed on is you will eventually lose money at some point. And you might make money at some point. But you're guaranteed to lose money at some point. It's like going and gambling at a casino. Now, I will not say that trading is gambling. I do not feel that it is gambling. It kind of depends on how you treat it, right? If you treat trading like a business and you have you formulate a trading strategy and you backtest that strategy over historical data. Now you have data, you've done a lot of work. I would consider that to not be gambling. But if you're just trading, buying and selling stuff all because of the emotional highs and lows that you're getting, and you love the emotions of it, I would classify that as definitely gambling. You have no historical evidence. You haven't done any of the work. You're just doing it to get the emotional highs off of it, which is all gambling ever is, right? It's fun. And, hey, it's your money. That's what you want to do. Fine. But that's what I would classify as gambling. This trading is not. That being said, what do we got? We have a new structure high, higher close, retracement into 618 fib retracement. Why is that unique? Why am I making a video on this? I do this type of stuff all the time. I post videos like this every week. Or not videos, but I post ideas like this every week. Well, one of the reasons I find it unique is look at the top here. What do we have? For those of you who don't know, I'm going to go ahead and draw it in for you. We have a double top, which is pretty interesting. I don't think we've ever really talked about double tops on the TradingView channel before, so we're going to talk about them today. Double tops, in order to have one, you essentially have to basically have this high, the initial test of a certain price level. The market needs to have a small retracement or a big one. It doesn't really matter, but a retracement, and then it needs to retest the highs of the first test. Okay, so the highest, it has to equal, the second test has to equal the highest close of the first test. All right, so the second retest has to, the highest high of the second retest has to equal the highest close of the first retest. I know I just repeated myself, but I didn't really say it that well the first time. That said, though, this is valid so long as we do not close above the highest high of the first test of that price level. Okay, so if we were to say, come all the way up here, if we were to come up here, and we close right here. Let's do another one that's thinner. All right. Oh, that's not what I wanted to do. Let's do another one that's thinner right here. This will be our wick. Let's make it green. This is going to be green too. And this, we got to fatten this sucker up. Boom. There we go. Well, we could have made that one a little higher, couldn't we? Just to kind of, get the point across. Okay, hold on. This is going to be annoying. It's going to really annoy me. Most of you probably don't care about this kind of stuff, but I'm a little anal when it comes to the details. Okay, right there. We closed, if this had actually happened and we closed above this would not be a double top because we closed above the highest high of the first retest. So this would disqualify, in my book, as a double top. We didn't have a retest. We didn't have a second retest. We broke the first test of that price level. So that's not what we have here, though. The highest close, the highest high, and equaled the highest close of the first retest, and we did not close above the highest high of the first retest. So this is a valid double top. Now, double tops are significant because they identify a reversal in trend. As we identified before, we are bullish. A double top comes as a reversal, as the market intending to reversal. And that doesn't mean it always does. Actually, I've tested double tops before. They're not that consistent with regards to identifying reversals. Sometimes you might get some short-term reversals in the market, but you're not always going to get a reversal every time. And sometimes it's very short-term. It's like this, and then it rallies. This could still very much rally, which is why I'm taking this trade. I know that double tops are not that consistent. I have my fib retracement tool. I don't consider the relative strength index when it comes to my trading strategy, but it's nice to look down and realize that I have confluence there. And right here, if you look over in the left corner of the screen here, over here, we are oversold by 1557. All right, so for me, my relative strength index numbers are 80. Above 80 is overbought. Below 20 is oversold. Now, I don't think those are the original numbers the relative strength index starts you off on. I think the RSI starts you off on, I want to say 70-10, something around those lines. So I think that's what it starts you off on. I always change it to 80-20. That works for me. It works fairly well. I don't use it or even consider it in my trades, but it's nice to look down. So we are oversold. We have the double top, which is not a very consistent pattern. And we have the 618 fib retracement. And look where the market's coming. Look left, structure leaves clues. We're also finding support right here. We zoom out even more. Yeah, we don't really see anything else. So we do have a support level. So the market is coming into the structure level and very well may rally. So that's kind of it, really. I mean, I just wanted to highlight this. It's really cool to find double tops and double bottoms, and we've never really talked about them before. I think they're really cool. They're not the most consistent indicator of, you know, trend reversal, but sometimes they are. And generally speaking, when you see a double top, you think of a reversal, or at least you think of some kind of a retracement like we're having right now. Now, is this going to be a full-blown reversal, and are we going to continue to head lower like this? I don't know. That's anybody's guess, really. I honestly have no idea. That very well could be what is happening. So, but in reality, I'm hoping that we have something else. I'm hoping that we have this. That's what I'm hoping for. I'm hoping that we don't come down here. I'm hoping that we don't stop me out, and I'm hoping that we continue higher. So, that being said, guys, you know, it's going to be interesting to see kind of what happens here. And yeah, I'll keep you guys posted, and I will update the trade whenever it comes to fruition. So far, I had a very, very big winning streak. I actually keep all of my trades, and I actually closed the file down. I don't know why. I should have kept it up. But I actually keep all of the trades that I have in a Excel document that I call the TradingView Trade Analysis Journal. I'll go ahead and open it just to show you guys right here. And as you can see, you know, we had a very large winning streak, which, I mean, if you look at here, it's been nothing but a sea of red. So the longest winning streaks I ever had before this was like 4. So this is really significant because I believe this is like 8, not including the 2 red ones right here. So this is a pretty big winning streak for me. So I'm not really anticipating this being a winner. I'm actually anticipating this being a loser. But I don't know. It could still be. If you're on TradingView, I hope you actually saw that. You may not have. TradingView may not have allowed you to see it. It may have simply been recording the charts. But anyways, that being said, guys, you know, that is the analysis. So we've had a lot of winners recently on the TradingView trades, and I'm hoping that we will continue to have them. But this may be a loser simply because we've won a lot. And, well, that's just how statistics and probabilities play out a lot of times. So, but hey, there's no guarantees. That's why you got to keep trading, keep going. I mean, if I was to say, oh, I don't want to trade because I've had a lot of winners and I think it's going to die and I'm not going to actually do well, okay, fine. If that's your mentality, then that's not a good one to have. So that being said, guys, I hope you enjoyed this video. If you did, make sure to like, make sure to comment, and make sure to follow so you guys get identified anytime I post an idea or anything of the sort. And hey, if you value this kind of content, then go out there and share it with other traders that you know, share it with other people, share my profile, my account. You know, I would really appreciate it. It'd be the biggest compliment in the world to me. It shows that not only did you like it and you follow, but you liked it enough to share it. That is wonderful. And, you know, eventually I would like to create some kind of trading community, you know, on some kind of platform. So I'm kind of looking into that, doing that kind of stuff right now, but I'm not allowed to promote any external websites because that is against house rules for TradingView. So that's fine. No big deal. TradingView is awesome anyways. I love it. So I overlook that. That being said, guys, if you liked it, do all that for me, and I'll see you guys in the next one. As always, know the risks, plan accordingly, and have a great day.